Hi guys and welcome to the trading show. This week we are gonna talk about
markets, high volatility on energy market. Our portfolio, crude oil flies. Tip of the week, gold, intraweek bias. And the weekly rollover.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Well, so let's take a look to understand what happened during the week. Certainly the energy sector has shown movements of some magnitude. In this chart we can see the gasoline future, which gained about 12% over the week. Crude oil future 10%, while heating oil about 6%. We are therefore talking about important upward movements for the energy sector, excluding natural gas, which instead seems to be in a free fall compared to the maximum reached at the end of August 2020, with a minus 12% during the current week. On the other hand, as regards the stock indices, it has been an insignificant week and the returns are all close to zero. A slowdown in the movement of equity indices is evident. We see here the Nasdaq, and the same goes for the S&P 500, and probably a little break is natural after such an important rise. Volatility is slightly increasing, but not too much compared to the previous week. I also point out how positive the whole grain sector is. We only see positive returns at 5 days, 1 month and 3 months, and in particular look at the impressive up move of soybeans future. As regards the euro-dollar future, it seems to have entered in a trading range. After the sharp rise we saw in the past months, during the current month prices are more or less unchanged. Finally, we have Bitcoin future, which is giving some signs of life, closing the week with an increase of almost 6%. Talking about implied volatility, we know recently there has been a fall in equity indices, which is usually associated with an increase in volatility, but this did not happen. In fact, after a small increase in volatility, we see now a complete contango for the SPX volatility indexes. While we are in almost complete backwardation if we analyze the forward structure of VIX futures. In fact, we see two very different pictures of volatility, analyzing on one hand the SPX volatility indexes and the VIX futures on the other. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hello everyone, from Alessandro Danos. Today I will show you some trading systems, in particular about the energy market. And we will start from this system that we can say is a mix between a bias and a trend following strategy. So therefore it enters on certain days of the week and it will look for the breakout both on short or long side. On the heating oil market, we can see that during this week and the last one, the strategy took two profit targets, a profit of about $2,500 that on heating oil I must say is not so ambitious. A short the last week, and then the other closed just yesterday with the long. Going to see the performance report, we see that the strategy achieved, thanks to these two beautiful trades, the maximum of equity. These trades worth $2,488 each. You see that is 2,488 because slippage rules and commissions have also been included in the system. So these are what will define the net results of the systems. Now let's move to another system, another strategy, always on the sector of energy. This time, however, on the crude oil market. I had already shown this system in the past because it is continuing to work very well. I want to show you this beautiful series of trades starting from these shorts, then some slightly smaller trades until today, where we see that the strategy is in a short position. The strategy was developed on a 60 minutes time frame, and it has a bias criteria to enter and exit from the market according to very specific times of the day. Also want to show you the performance report, where we can see that the system has managed to recover from these two drawdowns with such a good regularity, and at the moment it is on the highs of equity. Let's go ahead, and this week I also want to show you the Titan that we use to filter our strategies. We will show how the energy sector is progressing. So we have isolated 41 systems, which are the system we have in our portfolio at the moment on the energy sectors. And Titan will select as only some of them on the basis of some filters that are customizable in this mask. Looking at the back test, we see that immediately during this year, the test starts from 1st January 2020 up to today, September 18, and we see how the profit obtained by the filtered equity is $420,000 against the $271,000 that would have been obtained by trading the strategies without applying any filter. Moreover, here we see the results using all the strategies with just one contract. We would have obtained a return of $133,000. Then we see that it's such a big difference compared to those who were the 420,000 earned with the filters of the Titan. Now let's have a look also at the equity lines of the energy sector, and we see that the filtered equity is represented in blue, while the red line represents the unfiltered one. It's nice to note, like the blue curve is higher than the unfiltered one. Certainly the drawdown is still present, but there is such a big difference between the blue curve and the red curve. We could say that the blue curve has stopped around the level of $200,000 drawdown, while the red curve, without filters, has continued its descent up to over $350,000. All in all, with the $420,000 earned by the energy sector, we can say that surely 2020 has been more than lucky for this particular sector.
Hello everyone from Andrea Unger, and today we will talk about a particular bias on the gold future. And gold future is listed on the COMEX exchange, and here we can see the intraweek bias. And in particular here it's represented the cumulated average of each movement of each bar into the trading week. So it represents a sort of usual week or intra-week average movement. And here we can notice that on a different period analyzed here, we can see that there is a sort of gap up at the beginning of the trading week, and this can be seen both on the red line and on the blue line that represents two different trading periods. And then we can see that there is a short movement on average here for a certain number of bars. And also this, even if it starts in different bars, it seems that there is a certain consistency in terms of movement here. And then we can see here a very powerful movement on the blue line, but this seems not to be confirmed by the red line that analyzes another period, and so I would ignore it for this time. And then here finally we can see a very strong bullish movement at the end of the trading week, and it seems to be partially confirmed by the red line. So if we sum every information here, we can also try to combine the final week movement, so this one, with the bias of at the beginning, so the usual gap that occurs at the beginning of the trading week. So we can try for the long side, to enter on the Friday's afternoon or Friday's morning, however you prefer, and then not to exit on Friday's closing time, but to close at the after some bars at the beginning of the new trading week. And these are the results for the long side. I think the equity has a very nice and beautiful shape that seems to demonstrate a certain consistency in this kind of bias. And for the short side, the strategy is not so good as the long side, but can be appreciated anyway, and it's quite nice anyway. And the overall equity shape of the strategy is quite nice. And also the average trade it seems to be sustainable, but the best one is on the long side, that goes over $227. While on the short side it's not so good, but you may try to work on this, maybe changing the hours or adding some sort of filters. I would recommend, as usual for you, not to trade a strategy as it is at the moment, because there isn't position management, there isn't any position management techniques, such as the stop loss or the take profit or the break-even stop. And as you can see from here, you have the largest losing trade that is approximately $4,500. That is a huge amount of money for the gold future. And so I would recommend you, first of all, to add a stop loss and to manage properly the open positions, because otherwise you will risk a lot trading this raw kind of strategy.
Let's take a look at the rollover calendar for the next week. We have the settlement date for crude oil and Bitcoin future on September 22nd and 23rd respectively. As you know, we have already rolled over crude oil future, so only Bitcoin remains. I point out that there are other futures, the remaining energy futures, platinum, sugar and live cattle, which are close to expiry. So be careful, because when the volume and the open interest move from the current expiration to the next one, it is advisable to carry out rollovers even before the settlement date. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call, totally free, with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.